Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, and sponsored by Revival Gold, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is David Erfle, founder of Junior Miner Junky. David, welcome back to Kitco.
Thanks, Paul. Always great to talk to you and always great to see you. Thanks for having me on again.
It is especially great to see you today, David. You live in Southern California, so I imagine metals and mining have not been front of mind for you in recent weeks. How are you holding up?
Yeah, it's been quite a story around here lately. 4 years ago we had a major fire here right after I bought this house, and it came dangerously close to torching our entire neighborhood. And the fire department did a great job saving it, and then the fire this time. So that fire ended up saving us this time, because the fire this time burned up to that burn scar and stopped there. So about a mile away. So we were twice lucky, but a lot of our friends and neighbors, not so much. I mean, it's been very heartbreaking, a lot of the stories around here.
I know I've been reading some of those, but I'm happy to see you're all well and hope your family is well as well. Now, in terms of, perhaps it's going to be in bad taste, this analogy, but in terms of fire and firebrands, the United States has a new president in Donald Trump. He's come out firing on all cylinders with a raft of executive orders, including positive sounds for the oil and gas and mining industries, declaring a national energy emergency to expedite permitting and getting projects into production. This has been echoed by the likes of Idaho Governor Brad Little, who last week signed an executive order for the Strategic Permitting Efficiency and Economic Development Act, or SPEED, to accelerate state-level permitting. So we've got federal level and state-level permitting in Idaho being accelerated, and I think other states around the nation are looking at doing similar things. Now, many copper projects in the United States have stalled due to permitting issues. So, David, is the deep freeze on copper projects in the US now going to thaw?
Yeah, Paul. Well, lost in the excitement of all the tariff excitement was President Trump announcing a $500 billion joint venture called the Stargate Project with SoftBank and Oracle and several other companies. This venture is basically focused on accelerating the permitting process for new energy infrastructure to power data centers and the AI revolution. This large scale build out is going to demand significant energy and materials, especially copper. And also, he signed an executive order to boost Alaska's natural resource industry by reversing the environmental protections from the Biden administration that limit oil and gas extraction, logging, and other development projects across the whole state, including the Ambler Access Project. Now, the Ambler Access Project it involves the construction of an industrial access road connecting the Dalton Highway to the Ambler Mining District. And Ambler is an Alaskan region containing high-grade deposits of copper, zinc, lead, gold, and silver. And the road is really critical component to the development plan for the Upper Kobuk mineral projects, which are jointly owned by Copper Junior, Trilogy Metals, and Major Miner South 32 under the Ambler Metals joint venture. Now, Trilogy stock, as soon as it was acknowledged that Trump was going to win the election, the stock zoomed up and it's tripled since then.
Now, David, President Trump has talked a lot about the imposition of tariffs on imports from Canada, from Mexico, from elsewhere, from China. Copper is one of the commodities that the United States imports a lot of. The USA produces about 1.1 million tons a year of copper, according to the USGS. It imports about 890,000 tons. So any import tariffs on things such as copper or just general tariffs could have quite a negative, perverse effect in the United States for things that need copper, such as energy infrastructure. What's your view there? Will he go through with these?
Well, yeah, I mean, he's the president of chaos and volatility. He says one thing, and then he says one thing on his on X, and then the editors have to edit it down and change what he says, tone it down, and so it all depends on what he ends up doing. So, I mean, I think he's going to go through with these tariffs, although it's going to be very bad for inflation, and I think eventually for the economy. But that's is basically his policy, and that's what he plans to do. So it just the severity is the question. How severe is it going to be? And gold, loves all this chaos and uncertainty, obviously, because we got another all-time high today.
I suppose there is perhaps a silver lining or even a copper lining to this, David. If the president imposes tariffs on, and that includes on copper imports, presumably that would raise the price of copper in the United States and enable domestic producers to get higher prices for their copper, which could stimulate the development of some of these other projects that may be being thawed in the pipeline.
Absolutely. You watch the 450 level on copper. If copper gets above 450, that's when I think that could also ignite the silver price also.
Now, you mentioned the sort of 500 billion program, the Stargate program, David. What other Trump headlines have caught your eye the past week or two, and why?
I mean, there's so many, right? I mean, but the big one was when he was speaking virtually at the World Economic Forum last week in Switzerland. He said that he will demand interest rates drop, and likewise they'll drop all the way around the world. And then later he suggested he knows more about monetary policy than Fed Chairman Jerome Powell in comments he made to reporters in the Oval Office. I mean, Trump has fought with Powell in the past, and he recently threatened again to challenge the independence of the Fed. Powell's mandate, his mandate, Trump hired him, and when his mandate expires in May of 2026, and Powell has stated he will not resign. An open battle between Powell and Trump is going to bring more uncertainty into the marketplace, which would benefit precious metals as this new administration could usher in a new government stimulus and easier monetary policy, which which is basically what they've been hinting at. I mean, and then yesterday during the post FOMC press conference, Powell was asked about the Trump comments right off the bat. Of course, he stated that he is not going to have any response or comment whatsoever on what the president said. I mean, during the previous press conference, Powell stated an emphatic no when a reporter asked him if he intended to resign. So basically, following an all-time weekly close last week, gold futures are moving to possibly close at a monthly all-time high. Tomorrow is the last day of the month, above 2,800. And what's happening is that the London LBMA, London bull market players, they're racing to borrow gold from central banks, which store bullion in London, following a surge in gold deliveries on the U.S. speculation of potential Trump import tariffs. So, I mean, although Trump has not mentioned precious metals in his tariff plans, the risk has basically been enough to boost gold deliveries to the COMEX in New York as part of a market that has sought to hedge its positions on the U.S. COMEX exchange. And they're seeking to benefit from a jump in the price premium of COMEX futures over London spot prices. I mean, right now, gold is making all-time highs in both spot and futures, but the futures price is quite a bit higher than the spot price right now. I mean, both gold and silver futures are being priced significantly higher than spot, pushing effective gold lease rates through the roof. So, I mean, the marketplace remains nervous regarding the new president's and administration's trade and foreign policies, especially any new trade tariffs and the uncertainty surrounding Trump's tariff policies. That's beneficial for precious metals, obviously.
I've also been reading there's some people in his administration who thinks that the president should sell the US gold reserves and use that to buy Bitcoin. We won't touch that because it's not something I'm particularly expert on. I know it's been covered very well elsewhere on the internet and obviously on Kitco. We could debate whether Donald Trump knows more about monetary policy than the head of the US Federal Reserve. But one thing I think is clear is he certainly knows less about tariffs and hasn't read Adam Smith's Wealth of Nations, which was written about 300 years ago, and the inflationary impacts of that. If he wants to combat inflation, tariffs are certainly not the way to go. David, you mentioned gold. Let's talk more about that. With gold knocking on the door of $2,800 per ounce as we record this program, at least 20 gold companies that I sort of follow closely are trading at 52-week highs. There's been a lot of talk in the last year or so about the disconnect between gold cos and the run up to higher gold prices. Will gold stocks now ride up with the gold price, do you think?
Well, basically, as far as producers are concerned, the companies you mentioned they've done a great job of controlling costs on high margin assets, and the developers that you mentioned have limited dilution while de-risking high margin assets with a relatively smooth permitting process. They've seen their share price making 52-week highs along with the rising gold price as well.
David, how much higher do you think the gold price has to go before it lifts all gold stock boats?
Yeah, well, the difference between the bull market, this bull market, and the previous bull market is the cost of capital is a lot more expensive, and inflation has wreaked havoc on a lot of these companies' costs. So the rising tide has not lifted all boats based on that. I mean, capital is extremely hard to come by. So, the initial target for the cup and handle breakout is in gold when it broke out above 2,100 is 3,000, and then the logmatic target is 4,000. So, I've been saying, most of last year that gold would hit 3,000 in Q1 2025, and I still see that. Especially now that we're breaking out here and after the gold price corrected around 10%. So I don't know if it's ever going to lift all boats, and I don't think it really should, because a lot of these companies still need to go away. I mean, a lot of these little companies, they're raising, $2, $3, $5 million, and it's really not doing much. You can't really have a substantial drill program on that. And as far as developers are concerned, the ones that have proven that they've got access to capital, they've raised money at the right prices, they can raise money without a warrant to limit dilution also. So they're doing really well. So, but it's the optionality plays with lower margin projects that haven't proven to the market that they have the access to capital. Those are the ones that are lagging, and it's the junior explorers are like have the attributes like I mentioned that really haven't been able to raise enough money to have a substantial drill program. I mean, even if they come out with a bonanza grade result, the street sees this and they go, wow, that's a company that I'd really like to get into. But look at their balance sheet. They're going to need money in 6 months. So let's sell the stock, and then we'll wait for the private placement, get maybe a full or a half warrant for a lot cheaper when the stock goes down, and then in 4 months later, we'll sell the stock and we'll strip the warrant. I mean, that's been going on ad infinitum ever since the retail basically left this sector in 2013. These are the kind of games that the street can play when there's no dumb money, no retail in the sector to really bail one out of an ill-timed position in a junior.
David, let me sort of rephrase that question and perhaps come at it from a different point of view. One could argue that part of the reason that a lot of companies are hitting 52-week highs is because their valuation had fallen so much in previous years. That being the case, it's very likely that companies will continue to hit 52-week highs as the gold price continues to rise. And so how far do you think things can go before gold producers, gold developers are sort of more fully valued or better valued or more accurately valued?
Well, I think the big reason why this has been happening, this disconnect, is retail, like I said, has left the sector. So basically, it's Western investment demand is the key ingredient missing in this gold bull market. That's why when you take a look at the gold price, it's making these all-time highs. And like you said, sure, there's a select few companies that are making all-time highs with it. But as far as the sector is concerned, if you take a look at the GDX and you take a look at the GDXJ and you look at silver, those charts look basically identical. And that's where the leverage is. That's where the speculative leverage lies. And what we need is the stock market to basically rollover. We need, especially AI and crypto, to have some repositioning coming on in the market. Now, with that being said, China's DeepSeek has rewritten assumptions around the price to perfection and overcrowded AI trade this week, as the gold price is now trading at fresh all-time highs. This has basically provided opportunities for that diversification. I mean, AI darling Nvidia experienced a $500 billion plus equity wipeout on Monday, and that accounted for over half of the $1 trillion U.S. stock market loss to begin the week. So if you take a look at Nvidia's stock, the after open action in NVDA has been negative since October. And this means that big investors have been taking their outsized gains. So with Nvidia's market cap still over $3 trillion, its current valuation equates it to roughly 10% of the value of all American goods and services produced over 12 months. So it basically, Nvidia's single day loss of over 500 billion is also 100 billion more than the total market cap of the entire precious metals mining sector.
That is quite incredible, isn't it, David? We have more to come, including big M&A news, touching on a developer that I know you follow closely. But first, a word from our sponsor, Revival Gold.
Revival Gold, ticker RVG on the TSXV and RVLGF on the OTCQX market, is one of the largest pure gold mine developers in the United States. The company is advancing engineering and economic studies on the Merkur Gold Project in Utah and mine permitting preparations and ongoing exploration at the Bear Track Arnett Gold Project located in Idaho. The company is financed and currently focused on the completion of a preliminary economic study on heap leach gold resources at Merkur and continued exploration along 5 kilometers of underexplored structure at the company's multi-million ounce orogenic gold system at Bear Track Arnett. For more information, please visit www.revival-gold.com.
Silver developer Discovery Silver is to become a gold producer after agreeing to buy the Porcupine gold mine in Ontario, Canada from Newmont for up to $425 million US. The company anticipates producing over 285,000 ounces per year during the next 10 years. Investors love the news, with the stock up 64% since the announcement on Monday. David, Discovery is one of the companies that you follow. What do you make of the deal?
Oh, this is a very positive deal for Discovery. They basically stole it for $26 an ounce in the ground. And the benefits far outweigh the immediate dilution effects. And there's not much in the way of dilution with a royalty from Franco-Nevada and deferred cash, while the deal basically establishes Discovery as a multi-asset portfolio producer that improves diversification and provides exposure to both gold and silver prices now. The bulk of the financing came from a royalty from Franco, which is part of the deal between the companies. It's going to have Franco end up owning 9.9% of the company. And then they're also going to be raising about $555 million in financing for the deal, and that includes a $400 million royalty and debt agreements with Franco-Nevada and about $155 million in a public equity raising. So, I mean, this acquisition adds a producing asset projected to grow output of more than 285,000 ounces over the next decade and broadens Discovery's base beyond the Cordero Silver development project in Mexico.
I want to talk about Cordero in a moment, David. Franco, as you mentioned, they're going to participate in the equity financing as well, a bought deal. I think one thing, many things stand out about this transaction, one of which is the bought deal is at 90 cents, I believe, which is way below the current share price. The company share price is about $1.50 at the moment. And the market doesn't seem to mind the fact that there's this bought deal, which is currently well in the money. Why do you think that is?
Well, because like I said, they got a steal on the project. $26 an ounce in the ground, and now that'll basically make them a producer. And the major issue here is that the stock will no longer be beholden to the Mexican government permitting process.
Okay,
That's the
let me
permitting
pause
fears.
there, 'cause as I say, I want to talk about Cordero in a moment. But before we get there, a few other things. Now, Artemis Gold is the newest gold producer, having made the first gold from its Blackwater development in British Columbia. It now has a market cap of 3.5 billion Canadian. Discovery's market cap, after going up 60% this week, is still just 604 million. Given that we're talking about Porcupine being a steal at what you said, $26 per ounce, how much higher do you think Discovery's valuation can go?
Oh, so it depends. Of course, it depends on the market. It depends on the gold price. But I mean, I think it could easily get to $1 billion pretty quickly. I mean, it's going to have 771 million shares out when the deal closes. They already had, I think, 30 million cash Canadian, and they're going to have another 220 million cash. So they have 250 million cash Canadian. They'll have 100 million debt facility from Franco also. So yeah, I mean, it's still cheap.
Okay, now I've cut you off rudely twice when you started talking about Cordero, but we'll get to that now. As you were suggesting, this has clearly taken the heat off the company and its ability to get a permit for the open pit Cordero project, silver project in Chihuahua. They're looking at 33 million ounces a year of silver equivalent production there. CEO Tony McCooch last year was saying that permit was due about now. Obviously, it's not yet materialized. It's a hell of a positive pivot for the company, and it's a hell of a second string project to have in its pipeline in terms of Cordero. In terms of the pivot, I mean, it's just fantastic, isn't it?
Absolutely. And it's funny, Discovery got another piece of fantastic news from another company, Alamos Gold. They received what I believe, correct me if I'm wrong, is the first environmental permit granted in Mexico since 2023 for its Puerto del Aire project in the Mulatos district. So the permits for Cordero may not be too far behind now.
Okay, but I will put the caveat on that, David, that that permit is, I believe, an extension
underground
permit, and it's for underground as well.
Right.
So there could be naysayers who would argue apples and oranges there. But yes, it's certainly.
If you take a look at some other junior share prices that are waiting for Mexican permits, they popped this week quite considerably.
Well, it certainly shows that the administration of Claudia Sheinbaum is not an enemy to mining and to a greater or lesser extent wants to help facilitate its continued development. Now, David, with that Newmont divestiture of Porcupine, that's removed the overhang of Newmont's divestiture program from the market. So clear waters ahead. Who do you see as leading M&A targets now?
Well, Perpetua looks like a solid M&A target. Skeena looks like a solid M&A target. Full disclosure, I'm a shareholder and I recommend the stock to my subscribers. But so it's funny.
Skeena's in British Columbia. Yep.
Right. And Skeena, they were able to fully finance that project, and they still have yet to get their environmental permit, which they don't expect to have for at least maybe by the end of the year or early 2026.
It's quite impressive or amazing how different jurisdictions produce different results in different timescales. David, I want to talk a little bit about copper as well. There've been quite a good few. There's been a number of copper juniors hitting some very good results recently. Yet the market has responded to those individual names. And here I'm thinking of, NGX Minerals have had great hits at the Lunahuasi project in Sabaneta, Argentina, Chilean explorer Atex Resources with their Valeriano, and more recently Amark Resources in the Tucson district of British Columbia. They've all had good hits. Their share prices have all gone up handsomely. It seems that investors are keeping an eye open on copper exploration, but it's far from being across the board. What do you think it will take for investors to really get to grips with the copper story?
Yeah, well, what's important was the market reaction to these particular drill results that you mentioned, which was very favorable. I mean, last year, there were many instances where bonanza grade and high grade results were sold if the company was low on cash and likely required more near-term finance funding. But another positive note, although reports say the talks have ended, that Rio Tinto and Glencore recently held discussions about combining their companies. I mean, if that's successful, it'd be the largest mining deal ever, and it would draw more investor attention to this under-owned and basically forgotten sector. I mean, we need more high-profile M&A combined with major discovery or two to attract more interest in this sector, Paul. I mean, the Trump tariff threats have copper moving, like I said before, moving up towards that key resistance at $4.50 a pound. If copper surpasses $4.50, it could basically signal a bullish breakout, with silver and the mining sector expected to follow closely behind. I mean, silver has now broken out out of a bullish wedge along with the gold stocks today. So gold futures posting an all-time monthly high close tomorrow of above 2,800 could see a push toward 3,000 and beyond. And this could also trigger more interest as well in the sector.
Now, one company that is looking at the copper sector with interest is one you've already mentioned, which is Skeena Resources. After Amrap Resources put out its drill result, Skeena took a 13% in Amrap's neighbor, which is TDG Gold. They received a $7 million Canadian strategic investment. TDG is up about 230% since Amrap put out its discovery hold there at Aurora. That's all we have time for this week, unfortunately. David, thank you once again for joining me today.
Thanks again for having me on, Paul.
And if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.